Hello and welcome to the Genuine Learning blog. My name is Melissa Galasso, and today we're going to talk about a recent proposal from the FASB regarding proposed changes to interim disclosure requirements. So as you can probably imagine, this is part of the disclosure project, disclosure framework project that they've been working on for some time. We've already implemented ASU 2018-13 related to disclosures for fair value. We've also are in the process for private companies this year of adopting ASU 2018-14 for defined benefit plans. And so this is just the continuation of that project. So this was issued in November of 2021, and comments are due January 31st of 2022. So again, when we take a look at this, this is really trying to address some of these key items in terms of using that yes-no checklist. So the FASB created Chapter 3, or updated Chapter 3 of the conceptual framework to sort of have a yes-no checklist. If I answer yes, I probably do need a disclosure. If I answer no, I probably don't. And then to beta test it, they picked these key areas of existing accounting and said, okay, well, if it's yes on the checklist and yes, it's already required, we're in good shape. But if it's yes in the checklist and no in the disclosure or in the current disclosure requirements, then we need to add it. And if it's no and no, we're in good shape. But if it's no and yes, then we need to take it out. And so they have been going through and looking at various items, and disclosures for interim reporting was definitely something that they spent a lot of time on. There's a lot of discussion here. And so the proposal here basically adds a principle that requires disclosures for significant events or transactions that have a material effect on the entity related to guidance deleted from Regulation SX. So in addition to this, the SEC has also worked on their own disclosure framework as part of this, so it kind of all goes hand in hand. It also added language to indicate that those updates resulting from significant events should be disclosed in the notes. So again, clarification on where is the appropriate location for this. It also added language to clarify how to assess whether to provide disclosures on an interim basis based on the previous annual financial statements and notes. They also added references to interim disclosure requirements in certain sections, which were previously not explicitly referenced. So again, trying to be a little bit more consistent with drawing people's attention back to them. And they added language to the topic and its related subtopics to contain complete guidance on interim disclosures and references. And they also revised language to clarify which requirements indicate comparative disclosures. So again, sometimes if you're doing comparative financial statements, you don't have to necessarily do both years. Sometimes you do, so they kind of clarify. And then they also included guidance on the form and content of the interim statement and notes, as well as the applicability of interim disclosures for both public and non-public. So while not many non-public companies make interim financial statements, some do. And so in addition to the public company requirements, there is specialty rules for private entities. In addition, they made some conforming amendments and some other changes to Topic 250, which is our accounting changes and error corrections, as well as segment reporting and debt securities for investments. So they do know that they want this to be prospective, but they're not sure what the appropriate date is. So they're asking for feedback from those of us who are going to respond to the exposure draft to get that level of information. All right, so that's a wrap on our blog for today. We have lots going on in the world of accounting and auditing, so I hope to see you next week on our next blog. Have a great day, guys. Bye-bye.